Traders, we're looking at the pound yen daily time frame. I'm going to give you 3 trade ideas. Have a look at this swing, price swing low to high and the retrace. I'm just picking up the base of these candles. If we consider the base of these candles where we see this range, okay, we can pull a swing low to high, look at this retrace and then say low to high, equal measured move, brings us into, I guess what I'm trying to get at is don't underestimate how far this thing can pull back. So we've got this bullish order block, and I mean even if we pull it from here, the retrace back into, you know, these levels here is not out of the question. I mean, even if you want to consider that, something like that. So we've got this gap under here that is definitely a point of interest. So the first trade idea that I'm going to give you is this one. So we go with a limit buy at this high on the daily time frame, stop loss under this red candle here, and we go for a 2R, something like that. So that's idea number 1. Now let's go down to a 4-hour time frame and consider something else. Take that out. We have this red candle, right, level of interest here. Let's tap down into it a couple of times. We've got this double bottom or these relative equal lows here, which is interesting. And we also have this lower high to consider, LH. Now, there are a whole bunch of traders out there that get excited about this, calling it a head and shoulders, and that's going to give us that. Possibly. I'm looking at this a little bit differently. I'm looking at this from the point of view of relative equal lows builds liquidity under, let's just call it liquidity. So we get this liquidity pull in the form of stops. Okay, equal lows. We have buyers in here and here, so their stop losses are resting under here, right? The previous low. So we have this liquidity pool. And I'm looking at this from this idea where smart money attacks this liquidity pool to pair their orders long. So this head and shoulders is invalid, and these double bottoms are gearing up for a continuation, a higher time frame, long. So my second idea then, based on that, is a buy limit, long position, down in here, something like that. Stop loss under, well, there's a swing low here, and target we can go for, that's a 2R, okay, you can see 2.13. So that's one thing. But more than that, let's just grab the fib and we'll pull it from this swing low to swing high. This coincides with this price swing retrace into the 61.8 to 786. Well, we kind of had that here, double bottom. I mean, look, it could hold here and it could rotate and travel north, and that's going to be the third trade idea. So this one here, this second trade idea is a limit buy, and I'm going to be looking to target, see this here, this price swing from this low to high, 50% of this swing comes down into this level here. So this under here is discounted. Anything above is a premium, right? So we consider that if this is a discount, then we want to get involved at a discount, and hence my idea to, you know, that'll do, something like that, and stop under the low. But see the 50% level here? Well, if we carry that forward, give it an equal measured move, it takes us up to here. So let's just call that a target, and that's a 3.2R target. So that's idea number 1 on the daily. Less risk, but less likely it gets a fill. This one here, more likely we get a fill, but greater risk, because we don't know how far this is going to pull back. This head and shoulders thing, you know, could play out and we get a deeper pullback. So that's that. Now, we're going to be considering the risk, okay? Keep your position size the same. So if this over here on the right, the risk is say $100, for example, on your account, well, keep the risk on this one at $100 as well. Keep it consistent. Now, here's my third idea, and let's just say this doesn't pull back and it continues on. I mean, this low here is slightly higher than that, so it's like a higher low, although, you know, lower high. Let's just consider that this doesn't pull back. Then, long position at the current market price. I'm going to keep my stop loss the same as this one and go for that 50%, and that gives us, it's a 1.66R. Not so crash hot in terms of the risk reward, but we get a fill and we're in. Get our feet wet. This one here, we may or may not get a fill, Both of these carry a higher risk, and then this one's the lowest risk but the lowest chance of filling the order down in here. 3 ideas, guys. They all carry an element of risk. You could risk $100 on each of these ideas, keeping it consistent. In other words, no matter what you're trading, this range, this stop loss range, is always consistent. And that's an easy way then to manage your risk and be able to keep tabs on things. Right, so that's my idea for the pound yen. Three options there to consider. With that, I hope you have a great day. Safe trading. See you in the next one.